The euro traded in the sideways channel yesterday. Bulls attempted to break through 0.9957. A false breakout through the mark created a buy entry point, and the price then retraced up to 1.0015, in line with the upper limit of the corridor and the parity level. Today the focus will be on the middle of the sideways channel, which stands at 0.9984. Meanwhile, the pound sterling felt constant pressure yesterday, even despite the fact that retail sales in the United States came disappointing. So the bear run of the pound continues, with the price heading to its yearly low. Speaking of the macroeconomic calendar, several important releases are scheduled for today. Thus, UK retail sales are estimated to decrease by 4.2% year-on-year and by 0.5% month-over-month. Annual inflation in the Eurozone is forecast to stay firm at 9.1%. However, the CPI is expected to increase by 0.5% on a monthly basis. In other words, the European Central Bank is likely to remain hawkish on interest rates. This could provide brief support for the euro but exert additional pressure on the economy in the medium term. The University of Michigan consumer sentiment and consumer conditions for the United States are projected to grow, thus boosting the greenback. As for the euro-dollar pair, the longer it trades below parity, the deeper the fall in the euro will be. A sell signal will be generated either after a false breakout through 1.0015 or after consolidation below 0.9984. Should the price break through 0.9957, it will then head towards 0.9922 and 0.9880. Long position could be opened at 0.9880 on a rebound, allowing an intraday correction of 25 to 30 pips. It will also become possible to go long at 0.9984 and 0.9957 after a false breakout. Likewise, buying could be considered at 0.9922 on a rebound, allowing an intraday correction of 20 to 25 pips. If the price goes above 1.0015 and tests the mark from top to bottom, long positions could be considered with targets at 1.0050 and 1.0084. The instrument could be sold at 1.0084 on a rebound and at 1.0050 after a false breakout. Given the situation on the chart of British pound vs American dollar, it is now almost impossible to forecast anything. The focus will be on 1.1441 with a view to forming a new lower limit of the ascending sideways channel. If a false breakout occurs through the mark, the price will soar. Otherwise, the quote will keep hovering around 1.1441. Long position could be considered at 1.1406, allowing an intraday correction of 20 to 25 pips. Meanwhile, bears must protect the mark of 1.1476. A false breakout through the level will make a sell signal with a target at yearly low. Should the price break above 1.1476, it will then test the mark from top to bottom and retrace up to 1.1513 and 1.1547. It will become possible to go short at 1.1547 on a rebound, allowing an intraday correction of 20 to 25 pips. The instrument could also be sold at 1.1513 after a false breakout. A correction of about 30 pips could occur to the downside, with the pound falling to 1.1476 and 1.1480.